$300,000 gone. Her husband's secret trading hobby erased their entire future. She trusted him completely. What did she miss? It was a Tuesday afternoon in October. Sarah found a letter. It was from a brokerage firm she didn't recognize, addressed to her husband, Mark. But something made her stop. She opened it at the kitchen counter. The granite was cool beneath her hands. It wasn't a statement. It was a margin call, a demand for funds. The number at the bottom of the page didn't make sense. Negative. $87,411. And next to it, a withdrawal for $300,000. Sarah was a 42-year-old oncology nurse from Denver. She and Mark had been married for 15 years. They had 2 kids, a mortgage, and a shared dream for retirement. This letter was not part of the plan. On paper, their life was perfect. Sarah worked demanding 12-hour shifts. Mark was a project manager for a construction firm. Their combined income put them comfortably in the upper middle class. They had $225,000 in a joint savings account. Their system was simple: trust. Sarah handled the day-to-day bills. Mark handled the big-picture investments. He was the numbers guy. He'd sit at his desk after the kids were in bed, scrolling through spreadsheets. Sarah found it endearing. He'd even set up a small E-Trade account a few years back. A hobby, a way to play the market with a few $1,000s. She trusted him completely. When he said their investments were doing great, she believed him. They had a plan. They were a team. The change was slow. It began with small, invisible decisions, made late at night, behind the glow of a computer screen. Mark's hobby was becoming something else. He started talking about options and short squeezes. He would mention a win, a few $100 here, 1,000 there, but he never mentioned the losses. The real point of no return came on a Wednesday in May. The market dipped. Mark's small hobby account took a significant hit. Instead of cutting his losses, he felt a surge of adrenaline, a conviction. He told himself he could win it back. That night, he made a transfer, $20,000, from their joint savings account to his trading account. He justified it. It was a loan. He'd put it back in a week with profits. Sarah would never even know. He thought it was a strategy. It was a secret. And in relationships, secrets are a form of debt that always comes due. The first $20,000 didn't come back. It vanished in a series of bad trades. The panic set in, so he did it again. Another $30,000. He was chasing his losses now. It's a behavior traders call revenge trading. His screen was a sea of red arrows, all pointing down. At home, the tension was a quiet poison. Mark became irritable and distant. He'd snap at the kids, then retreat to his home office. Sarah asked if everything was okay. He'd just nod. "Stressful project," he would mutter. She bought it. She'd rub his shoulders. By July, the savings account was nearly drained. Mark was down over $150,000 of their family's money. He needed another lifeline. So he applied for a home equity line of credit on the house they had poured their lives into. He drew $50,000, then another $50,000, and then one final, desperate $50,000. In less than 6 months, he had vaporized their life savings. He had also leveraged their home. The total loss was $300,000. He started intercepting the mail, hiding bank statements, and hiding letters from the lender. He was living a second life. The margin call letter was the key. Holding it, Sarah walked to the home office. She opened his laptop. The trading account was already open. It was worse than the letter. A chaotic screen of charts and numbers. And a balance. Negative $87,411. She scrolled through the transaction history. Transfer after transfer. Withdrawals from a HELOC account. An account she didn't know existed. When Mark got home, she was sitting at the kitchen table. The letter was in front of her. She didn't have to say a word. He collapsed into the opposite chair. He started to talk. He confessed everything. The savings, the house, the lies. He just kept repeating himself. I thought I could fix it. $300,000. Gone. The college funds. Their retirement. 15 years of shared work. Erased by a secret. For Sarah, it wasn't just about the money. It was betrayal. For nearly half of Americans, financial infidelity is as bad as a physical affair. There was no easy fix. They had to sell the house, the one their children grew up in, just to cover the HELOC and the margin call. They ended up moving into a small rental apartment on the other side of town. Mark was stripped of his access to their money. He started attending Gamblers Anonymous meetings. Sarah took complete control of every dollar. For the first year, she couldn't look at him, not without feeling a mix of rage and pity. They went to therapy, separately and together, slowly, painfully. They started to rebuild. Not their old life, but a new one, a smaller one. Mark took a second job on weekends, driving for a ride-share service. Every dollar he earned went directly to Sarah. The trust is not what it was. It may never be. But they are still together. They are paying off the debt, $100 at a time. This isn't just a story about one man's secret addiction. It's a story about our financial system, a system that has gamified investing. It turns the act of building wealth into a video game, a high-stakes game you can play from your phone, using your family's future as collateral. Sarah almost threw away a single piece of paper. It uncovered a secret that grew for months. The documents we ignore often hold our most important financial truths.